Hey guys, it's Chris Mincola with the Mincola Group over at West USA Realty, and I wanted to share with you some insights into what the Fed is saying and thinking about when they're probably going to be looking at lowering the Fed's fund rate and what's kind of driving this. We talk about labor over inflation a lot because that's just what they're telling us, even though inflation is down to 2% now, and the true inflation just came in at 1.9%. They're looking at labor. They want to basically get to the point where they break the labor market, not be just before that, not working up, because we already know, even though the jobs numbers came out better than expected, they're not fantastic. And even part of the reason why a lot of people that own companies are holding on to their employees is because after COVID, it took so much time to get people back to work, get them trained, spend all that time and money getting them trained up, that's also a big factor. But let's take a look at this article here from, not my favorite, but the New York Times, who basically put together this piece here from Fed Chair. Her name is Beth Hammack she's from the Cleveland Fed, and she said it says jobs report bolsters Fed's patient approach on rate cuts, drawing Trump's ire. So, we know that President Trump wants to get the Fed's fund rate down, which will, of course, affect the bond market by about 65 to 75%. And, we know if we can get to 6% interest rates on average, you can get lower rates than that right now. Reach out to me. I'll explain how that works. But, we know that if we get down to 6%, even though we've seen a lot of new application data that's positive over the last 18 weeks or so, we know that that's when people are going to start entering back into the market. And when you lower, right now you've got a little over 1 million people definitely that we know are sitting on the sidelines. We've got a lot of people who have made those applications that are also trying to sell houses. About 75% or so people who are selling a home that they own are also going to purchase. So that all factors into this. But it says here that they're waiting. And biggest thing that she mentions here is tariffs. And I'm just going to play this for you really quick. This is just a piece of the interview they did with her at CNBC.
To companies, talking to businesses. One of my favorite parts of the job of being Cleveland Fed president is going out in the district and talking to companies, talking to businesses and understanding how they're thinking about things. What we're hearing right now is that the uncertainty is really weighing on businesses, and it's creating issues for them in terms of planning, in terms of thinking about where they're going to go. And so some of them have put pauses on whether they're going to make bigger investments, whether they're going to invest in new facilities, new capital plans. And then they're thinking about their hiring plans. They're thinking about their labor force. And do they have the people they need? How many people are they going to be able to keep on for what length of time, given what these changes might do for their businesses?
What is the macro effect of this? If people hold back now, what does that mean for the economy now, and what does it mean for the economy in the future?
It's a great question. We don't know the answer to that. I wish I had a crystal ball. We don't have one. I think everyone is trying to work through what the implications of these tariffs and these policies are going to be, how significant the tariffs are going to be, how long they're going to stay in place. And if you're looking at building a new facility, building a new plant because you want to bring back production into the U.S., you need to have confidence that those policies are going to be in place for a long period of time. Can't just be 2 or 4 years. It's got to be 10, 20, 30 years to get that capital investment to make sense. One of my favorite parts of the job.
Okay, so that's what they're thinking. And so they're saying the tariffs are the issue, which, the thing is on the tariffs, we know that is going to bring, it already is. I mean, I think it's like $15 trillion already in foreign investments or investments like Apple and people coming back here, and different car companies, all kinds of different industries, steel, everything you can imagine. AI is obviously a big one. So she says here, direct quote to, let me get back to that. Sorry for jumping on you there. Okay. I'll get it together, guys. Okay. I'd rather wait and move quickly to play catch up if I really don't know what the right next move is, Ms. Hammack added. And right now, I really don't know what the right move is based on all the information and policies that we're responding to. So there you have it. They're going to wait. And, my personal opinion is, and a lot of other people who are looking at this, the labor market is having a lot of trouble. And we know inflation is down. If they're waiting for that unemployment rate, which they've mentioned before, to get, right now it's basically 4.2 point whatever, so it's almost 4.3. They're figuring 4.3 to 4.5 means that the labor market's broken on the 4-week moving average. So it's really kind of ridiculous in my mind at this point when we know that the labor market's softening. Right in her district, in Cleveland, Procter & Gamble just laid off like 7,000 people, just as another example. So anyways, they are going to be late to the party again, just like they were when, they should have raised rates a little bit sooner. That would have kind of mitigated some of the issues that we had with housing prices going up so fast before and by so much. But anyway, that's just a quick idea of where they are. So we'll see you guys soon. If you guys have any questions at all about selling or buying real estate, or if you have any questions about getting a home loan or a refinance or HELOC, we have a great lender we also work with that can help you with that. And he specializes in getting people, home loans, especially VA, and no junk fees, no underwriting or processing fees. We call them junk fees. But we're happy to help with that and get you guys whatever information you need.